Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Today we will be presenting about tax administration of company. So before we start, I will introduce myself and my friends. So my name is Ahmad Syafiq bin Kamal Azam.
Yes, and my name is Ahmad Jamal Kauthar bin Borhan.
And my name is Khairunnas bin Syaridan. Assalamualaikum warahmatullahi wabarakatuh. Today I will present you about tax administration of a company. First, how the company be a resident in Malaysia. For resident status for company or body of person, there is two, which is carrying on business and not carrying on business. Okay. Carrying on business, management and control is being exercised in Malaysia, which is a business, and not carrying on business is same management and control is being exercised in Malaysia, but it's all about investment. Next. Okay. The second is what the tax implication might be received by the company. Okay. First, okay. Sorry. Another one, resident status of a company, business and non-business. It is about business and non-business. There need to be management and control exercised in Malaysia during the past year and any one of its business or affairs. Next, this is tax implication might be received if the company being resident or non-resident. The first is withholding tax. If the company be a resident, it's not applicable, and if the company being non-resident, we have 10% or 15% tax on nation in derived gross income. Okay, the second one, double taxation relief. If the company being a resident, it is applicable, and when it is not non-resident, it's not applicable. The last is income tax rate. If the company being resident and non-resident is the same, 25 for year assessment 2019 until 15, and 24% for year assessment 2016 and 90. Next, the next is what IRB does in practice. IRB practice is when the company want to be a resident, it need to apply to issue the certificate of resident. It can be applied manually or online portal at e-residence, and it needs to wait confirmation from resident status based on the tax return, which is Form C. That's it. Thank you.
Okay, Bismillahirrahmanirrahim. Assalamualaikum. So, my name is Ahmad Syafiq bin Azam. So, I'm still presenting about tax administration of company. So, the next point is what types of tax resident form used by the company for the submission of income tax. So, as we know that the tax return form must be categorized to two forms, which is Form C and Form E. So the Form C is basically about the written form of the company of the year of assessment, while the Form E is basically about the written form of the employer of the remuneration for the year of assessment. Okay, next. So next is describe procedure must be complied by each company for income tax under self-assessment system. So before I proceed to the procedure that must be complied by the company, so I have to explain about the self-assessment system for the company. So what is self-assessment system of the company? So basically, self-assessment system is prior to 2001. Malaysia adopted an official assessment system whereby taxpayer access to income tax by the IRB based on the tax return filed by them. So that means that the taxpayer must pay income tax that been assessed by the IRB. And then the self-assessment system is essentially a process by which taxpayers are required by law to determine the taxable income, compute the tax liability, and submit their income tax returns based on tax laws, policy statements, and guidelines issued by the tax authorities. Next. So, the procedures of income tax under SAS, which is self-assessment system. So the first one is estimation of tax payable, which is Form CP 204. And then the second one is revision of the estimated tax payable. The third one is new company's tax estimate. The fourth one is installment payment, and the last one is payment of balance of tax. So next. Okay, for the estimation of tax payable, Form CP 204. So pursuant to the section 107C subsection 3 of the Income Tax Act 1967 ITA, every company is required to furnish an estimate of income tax payable in prescript form, which is Form CP 204, not later than 30 days before beginning of the basic period. The estimated tax payable, which is submitted via Form CP 204, cannot be less than the estimated or revised estimated tax payable for the immediate preceding year of the assessment. The installments, if any, that the company being used installment method are due on or before the 10th day of each month, beginning from the second month after the start of the company basic period. Next. Okay, next is about the revision of the estimated tax payable. For the revision of the estimated tax payable, pursuant to the section 107, subsection 7, C7 of the Act, any revision of the estimated tax payable furnished under the form of CP 204 can be made in the 6th or 9th month, or in the both months of the basic period, or as provided under section 107C subsection 7 of the Act. Okay, next. For the new company's tax estimate, where a company commences business operation in a year of assessment, it is required to furnish its estimated tax payable to the Inland Revenue Board, which is IRB, in the prescribed form CP 204 within 3 months from the date of commencement of the business. The estimated tax must be paid in equal installment based on the remaining months in the base period by the 10th day of every month, beginning from the 6th month of the basic period of that year of assessment. Please be informed that IRB may impose a penalty for the failure to comply with the above requirements. Okay, next is installment payment. If the company is applied the installment method, due on or before the 10th day of each month, beginning from the second month after the start of company basis period under section 107 section 9 of the Act. The failure to remit the installment payment by the due date will result in a 10% penalty being imposed. The taxpayer is required to self-compute the 10% penalty and remit it to the IRB together with the installment payment owing as soon as the due date expired. It has been a change in IRB procedure concerning the issuance of the notice of installment scheme under Form CP 205 for the year of assessment. From the year of assessment 202 onwards, the IRB will not issue a Form CP 205 to the company where the estimate tax payable for the year of assessment is same as stated for the year of assessment and higher than the stated for the year of assessment. The remittance slip Form CP 207 must be enclosed with installment payment made. All installment need to be remitted as a timely basis. So next, the last one is payment of balance of tax. So with the effect of year assessment 2001, the balance of tax payable after taking into account the monthly installment paid under the deemed assessment provision will be due payable on the due date of the submission of the tax return. The last day of the 6th month from the date following the close of accounting period by the company. Where the company fails to pay the tax by the due date, the balance unpaid will be increased by 10% and will be recovered as if were tax due and payable. Any balance remaining unpaid upon the expiration of 60 days from the due date will be further increased by 5%. Okay, so next, the types of penalties might be imposed if the company does not comply such. Okay, so before that, I will explain you about the penalties on underestimate of income tax payable. So as we see in the slide, the failure to furnish an estimate by the due date and in accordance with the requirement of Section 107C of the Act, is an offence under Section 120, Subsection 1 and Subsection F of the Act. Upon conviction, the taxpayer will be liable to fine of not less than 200 and not more than 2,000 ringgit, or to imprisonment or for a term not exceeding 6 months, or to both. In addition, it is important to note that where the tax payable under assessment assessed, the first one is the revised estimate of the tax payable for the year of assessment, or if not revised estimate is furnished, the estimate of tax payable for the year of assessment. So by an amount of more than 30% of the tax payable under the assessment, the differences which exceeds 30% of the tax payable under assessment is subject to a penalty of 10% pursuant to the Section 107C, Subsection 10 of the Act. Okay, next. So these are the types of penalties if the company does not comply such, which is the self-assessment system in the company. So there's two penalty, the possibility that will happen, which is penalties on late payment of tax installment. The second one is penalty for failure to furnish tax estimate. Okay, next. Okay, for the penalties on late payment of tax installment, so under Section 107C, Subsection 9 of the Act, when an installment payment is not paid by the 10th of the month following which is in an installment is due, the amount unpaid should be increased by 10% without any notice being served. Okay, next. So for the last one, penalty for the failure to furnish to a tax estimate. Okay, the companies which fail to file the estimated tax payable will be subject to penalty based on the following table. Okay, where we can see that this is the estimated tax payable and the compound. For any company that does not file their estimated tax payable which is 100 ringgit and below, they will be compound 300 ringgit. If the company does not fail to comply their estimated tax payable, 501 to 1 million, we will compound 500, and 1 million and 1 ringgit and above will compound 1,000 ringgit. So that's all from me for the tax administration of the company.
Okay, Assalamualaikum warahmatullahi wabarakatuh. So I'm Jamal and I'm gonna explain about the chronology of changes from SST to GST and back to your new form of SST. So before I start this chronology of the SST to GST and to SST again, I'm gonna define the definition of goods and service tax and sales tax and service tax. So good and service tax is a multi-stage consumption tax on goods and service whereby each point of supply in a production chain is potentially taxable up to the retail stage of distribution. So service tax. Service tax is a tax charged and levied on taxable service provided by any taxable person in Malaysia in the course and furtherance of business. Next one is sales tax. It's a single stage tax levied on imported and locally manufactured goods, either at the time of importation or at the time the goods are sold or otherwise disposed of by the manufacturer. Next. So I'm gonna explain the starting point of the SST. So in the 1970s, the SST has been implemented by Datuk Tun Mahathir until the new Prime Minister, that is Datuk Sri Najib, he implemented the GST in 1st of April 2015. So in the 25th of October 2013, Malaysian Prime Minister Datuk Seri Najib Razak announced the introduction of Goods and Service Tax in Budget 2014. Replace the current Sales and Service Tax. The GST will be effective on 1st April 2015, and upon implementation of GST in Malaysia, we will join the 146 countries around the world which has GST and or VAT. So what is VAT? VAT is value added tax. So since the Datuk Seri Najib has been replaced by Datuk Tun Mahathir, the new Prime Minister, in 1st June of 2018, there is a declaration of GST tax holiday. What is a tax holiday? A tax holiday is a government incentive program that offers a tax reduction or elimination to business. Tax holidays are often used to reduce sales tax by local governments, but they are also commonly used by government in developing countries to help stimulate foreign investment. The next one is the passing of Sales Tax Bill 2018 by Dewan Rakyat in 14 August 2018. And the next day, there also be a second passing of Service Tax Bill 2018 by the Dewan Rakyat 15 of August 2018. So the next one is SST X Gazette. So before I start explaining what is SST X Gazette, I will define the meaning of Gazette. It's an official publication containing list of government appointments or promotion and other public notice. So it's like a public notice for everyone to know what is happening. Okay. In SST X Gazette in 28 of August 2018, the legislation to implement SST and repeal GST. This legislation to implement the Malaysian New Sales Tax and Service and repeal the Goods and Service Tax (GST) has received royal assent and was published in the official Gazette on 28 of August 2018. So the next one is the abolishment of GST. The abolishment of GST is at the date of 31 August 2018, and the first implementation of SST is on the 1st September 2018. Next. So now we explain about the differences between SST and GST. So the concept of GST or LST is very different in many ways. So the concept is, if GST, the value added and is a multi-stage tax, but SST is imposed on output stage only one stages. The rate of GST is 6%. However, SST multiple rates covering different categories of goods and service. So the advantages of GST that the GST never cost to business, never a cost to a business. Input tax available upon tax received, and it's a business friendly. And the advantages of SST are simple and straightforward. No refund issued to the business operator. Focus on narrow scope and people friendly. Now I explain about the disadvantages. The disadvantages of GST is a wide coverage and comprehensive. The next one is refund. It's an issue of consideration for the GST registration. And the last one is GST is imposed eventually on price sold to customer despite having input tax credit, resulting in cascading prices. So in the disadvantage of SST is a business cost. Deduction is based on sales that is matching principle. So now I will talk about the stages of sales and service tax. Okay, so on my right side is the SST paid, that is 6%, and on my left side is the SST collected by a customer. Okay, now we will go stages by stages, one by one. From the supplier, initial cost of goods sold is RM100 ringgit. Okay, the calculation is RM100 ringgit times 0 equals RM0 ringgit, and the collected by customer is also 0 ringgit. Now for the manufacturer that is under profit, 100% profit margin is the calculation. For example, I am 200 times 6% rate equals I am 12 ringgit, and that is the SST paid. On the SST collected by custom, they will collect 12 ringgit. On the retailer got 50% profit margin, so the calculation is RM 380 ringgit times 0% rate equals 0. So the collected from the custom is also 0 ringgit. For the consumer, they will get the final price, and the final price is RM 380 ringgit, and collected by custom only RM 12 ringgit, since the supplier and retailer has 0% rate. So now, the government service tax stages. Okay, this is the standard rate. So from the standard rate, the raw material supplier sales is 100 ringgit, and they collect 106 ringgit. So the collected GST is of RM 6 ringgit, and the GST we paid to government is also 6 ringgit. So the next one is from the manufacturer, is sale RM 150 ringgit and collect is RM 159 ringgit. So the collected GST is 9 ringgit, and they can claim back RM 6 ringgit and paid to the government only RM 3 ringgit. So the next stages is for the retailer, the sales is 300 for example, and collected is 318. The collected GST is RM 18. The claim back is RM 9 ringgit, and the paid to government is RM 9 ringgit also. For the last one, for the final, is the consumer. So the consumer will bear the entire tax burden from GST. That is total RM 18. So that is all for me, and so thank you and